What's up, guys? It's Rustic, your smart money trader here, and today we're going to be learning how to use your fib tools. So what we're going to go ahead and do first is we're going to open up Tradingview. I have Tesla's daily chart. That's what I trade, and I think Tesla's chart will be a good chart to learn the things that we're going to learn today. So again, we're going to be looking at how to use your fib or Fibonacci tools inside Tradingview. All right, so the first thing you're going to do is you're going to open your chart. You're going to find the chart. If you want to follow along with Tesla, that's what we're doing. And right here, yesterday on the last episode, we learned about trend lines. Today we're learning about fib tools. Okay, so we're going to click on this. Again, the little arrow to the right of the tool itself will allow you to open up a drop-down menu. Okay, so in this drop-down for the fib retracement tools, you got Fibonacci retracement tools, and you have Gann tools. So we're really only going to be focusing on the fib retracement and the trend base fib extension. Okay, so those are the two that are most commonly used. If you guys are interested in any of the other tools as far as fib goes or Gann goes, there's great tutorials you can find on YouTube, but I'm only going to focus on the two that I think are the most applicable for what most people are trying to do. So we're going to select at first the fib retracement tool. Okay, so once we have that tool selected, we are going to find a swing low or a swing high, and then we're going to connect it to another swing low or swing high. Okay, it's very important that if you pick a low, you're looking for a high. If you're picking a high, you're looking for a low, and I'm going to show you exactly how to do that today. Okay, so on the daily chart, we're going to look at the candle from Friday, January 6th. We're going to take the wick low right here, and you can adjust it once you started. Okay, so we're going to select that, and we're going to look for the next, in this case, swing high, since we started at a low. Okay, so we have the high right here. It is in the candle of February 16th, which is a Thursday, 2023. And we're going to extend that out. Now we see that price has already, made its move. If this was the candle that happened, we caught this move down, we could just, continue to extend it out as we look for retracement. Okay, but because we already have price there, we're just going to extend it out so I can describe to you what exactly it helps you read. Okay, something I want to draw your attention to is that I have custom settings as far as my color scheme goes, which when we talked in the video about the trend line, I also described how you can change those settings, but we will look at how you can change those settings before we start getting into the details. Okay, so on your tool, anytime you're using a tool, you have a movable, right? Movable options for your tool that you're using. We'll call it a toolbox. Okay, I can adjust the thickness of the lines, make them thin, make them thick. I like a 2 or a 3 just so I can see them well. You can also change colors. You can also, what I do, because it comes stock in a very large variety of color, I change mine to black, and I really want to highlight the 0.5 and the 618 as what I consider the beginning of potentially the golden zone. Really, the 618 is the golden retracement number. Tesla likes to trade to the 50%, so I like to highlight that one specifically. Some might say all the way up to the 786, so the 618 to 786, right? Or the 0.5 all the way to the 786 could be considered the golden pocket, the golden zone, right? Anything over 50, looking for here, looking for here, okay? So now that we have that set and you saw how you can adjust your colors, you also can adjust the trend line. If you look here, take the trend line off. The trend line does help when you're first learning how to use Fib tool, so you can see kind of where that, those two dots connect. It just helps you draw your eye to those spots. I often have mine turned off, but I'm going to leave it on right now. You can also extend your lines left and extend your lines right, so you don't have to continue to drag those out. We'll leave the lines extended to the right because we're looking at price as it moves to the right. Okay, so I also have my numbers set to right and center, and you can select these as percentages, or I'll show you that too. You can change the levels to be values or percentages. So sometimes it can help to change it to percentages to draw your eye to how many percent of the retracement that is. Right? You can also reverse it if you need to for whatever reason. So now that we're looking at the tool, we have our swing low, we have our swing high. Okay, this is a wave, this is a move, and what we're looking for is for price to retrace to a certain level. And that retracement is going to be areas that you can take a trade in. You can enter in that trade. If you are currently out on a retracement level, you can enter to go in the direction of the trend against the retracement. And I'll show you what that means in a minute. Or if you happened to go against the original move. So in this case, we had a bullish move and we were looking for a retracement. So if you went short here or into puts, then you'd be looking for price to retrace for an exit. So now what all does this mean exactly, and how do you enter trades based on it? So let's look at drawing a path for the move, original move. Okay, retracement. First one did not get to the 50%, bounced, came back down to the 50%. Remember I said Tesla loves to do 50% retracements, right? Especially on bigger moves like this, they can be a good original point of entry. So in this move, you'd potentially be looking to enter a long position when price, and again, this is a daily chart, so most of the time if you're looking at a daily chart to take trades, you're looking at 30, 60, 90, right? If you're trading options, as far as how many days out, you're looking to take those contracts. If you're trading shares, it doesn't matter quite as much, but you're looking to catch a move and hold for a little while. So again, here we got touching the 50, touching the 50, touching the 50, touching the 50, right? We drop below and trade back up to it. So that could be, again, start scaling into positions. You can start adding in at the 50. Now, if price falls below that, that's a perfect opportunity to scale in. And scaling in is just adding to your positions or averaging down. So say we entered in at the 50% retracement, right? Price never made it down to the 61.8, right? 61.8% retracement. So on this move, if you were sitting around waiting for that 61.8 retracement, it never happened and you missed, right? So where would you have got an entry? You would have probably waited for somewhere in here. So you missed your opportunity because you were waiting for a more optimal entry. Okay, so that's why we teach that you use your golden zone to enter, to average. If it falls all the way, which Tesla doesn't tend to do, but it could, average it again. Okay, at that point, if you took an even amount of shares here, here, and here, your average should be somewhere right above the 61.8. Somewhere down here will be your average, and you could look at setting a stop loss below 0, just in case price ran down. You wouldn't get completely wrecked if price continued to fall lower, But good chance that if we did this retracement, we'd be looking at, at least a bounce in the other direction. And so again, we're coming down. We got the 50% retracement. And so I described how an entry would look when you're looking for that. So now you say, oh, that's great. We got the retracement. We went long. But how can you use a fib tool to give us any additional information? And so what I want to show you guys from there is that you can use the fib extension tool to give you a price where it is likely to extend, or move up to based on this original move down. Where is it projecting that price is going to go, or where is it saying price is going to extend to, right? In this case, it's a move up, correction down. We'd be looking to look for extension to the upside, right? A good target out of the gate, even if you don't use the extension tool, is to retarget a run at the top. Okay, so even if you enter down here at the 50, you caught this entire move as you targeted the top, and that could be just a decent exit, and maybe you're not looking for anything more. Maybe you're in a shorter term play, so targeting just back to the 0 or somewhere near and looking for other signs. But if you're just using the fib tool, entering in on these retracements in the golden zone, targeting at least bare minimum back to the original swing high. Okay, so now I want to show you how to use the fib extension tool, the trend base fib extension. It's right here. I'd suggest putting them in your favorites so that they show up easily. Again, hotkeys for the fib retracement, Alt F in Tradingview. You don't have to click into the tool if you can just remember Alt F is for fib retracement. Okay, but we're going to look at the trend base extension, which uses 3 points of contact instead of 2. So same position, we're going to look at swing low to swing high, down to swing low. Okay, and what I realize is that I have my settings on custom right now, so I'm going to go ahead and turn all those fib levels back on. You can see some of them are different colors. I have these ones as red and gold, right? And then we have a couple different areas that we could look at as price extends higher. And I don't see, oh, there we go. 0.15, let's see if there's something. We got a 1.2, 1.4. We're just going to throw some additional levels in there so you can really see how that works. Okay, there we go. That looks pretty good. Okay, so we're using swing low on this one, swing high, same one, right? And then we're looking for the swing low, because once it's come back down here and we've verified with this move up that this is a pivot point. Okay, so we got a pivot here, come up, we pivot here. Okay, down here is a pivot, up here is a pivot. We came back down, we pivoted again as we start to move up. So then you can use that tool to say, all right, if this is going to keep running above the previous high, then where is it likely to go? So using your trend base extension tool, you are looking for at least the 1. Okay, would be a full 100% extension. And 100% extension means that it's the same distance from here to here as it is from here to here. Okay, 100% of this wave right here is this to this. And we call this A to B equals C to D. Right? And I'm going to label those spots for you. Let me see if I can use a pattern tool. And we'll use this one just because it has letters to label. But we have a... Nope, that's not going to work. We'll just do it this way. How about that? And this is just using a standard text box. We're going to label this point A. And we're going to label this up here point B. Okay, and we're going to label this point down here point C. And we're going to label this point up here where price hits on the full extension as point D. Okay, and then using that trend tool, just like we used on the last video, we will say that move there is the same as that move there. And the degree is slightly different, but if you were to drag it and put it next to each other, you would see that they are, basically more exactly the same length. So that's how your trend tool is utilized in order to find what a 100% extension would be. Now, that doesn't mean that price is going to end at the 100% extension. And so what you do see is that you see price came up and reacted to that 100% extension, overshot it and came back down and retested a fib level. Okay, so fib levels can be very important regardless of where we are at, because you can see that price trades in and around fib levels constantly. So we had this move, right? And we have this, but we still have these fib levels over here. You can see even back here, even though we're looking at extension, we can see that price respected the fib levels pretty well, right? We came back down to this fib level, we traded to this fib level, right? We came down through this fib level, back up to this one, rejected, pulled through it, up to this one, rejected, back to this fib level, right? Support, came up, came back down. That's where we got our last point. Now, as we head up, we come pretty close to rejecting the initial level, come down, break through it. We come back up, miss it a little here, and trade into it. Essentially, we blew right through these levels, right? Kind of traded down to this one, and then respected it as support and ran up through all the way to that 100% extension, and then back down to the 78.6, right? Respected it, overshot it by a little bit, but the numbers are good. Ran off of it. Okay, we pulled up. I don't know if there's a number in here, but I don't have it as a fib level, but came back down and respected that 100% extension level, and then traded up to the 1.272, which would be 127.2% extension. Ultimately got rejected up there and came back down, and we're still respecting fib levels, right? You see wicks on this fib level. You see us trade down nearly to this fib level. Okay, we traded up and got rejected at this fib level. Came over it, now have respected it. Okay, we pulled over and we came down through it, and now we are respecting it again. So could that mean, we're going to bounce from there? We're going to fall back down to the next fib level. But they are good areas to target, whether price is going up or down, even though that fib started with this whole move. All of this price falls between these fib levels and respects it for the most part. So important to know how to use this tool. And you could potentially look at saying this entire move, if it wants to go higher, right here, if we want to continue higher, we will test this fib level, and then we'll see if we rip through these fib levels, but potentially looking for the 1618 as a full extension if this was going to be a 5-wave move. Right, so let's even take this and go over here. Say, where could that be if this final wave, if we were heading higher, was going to be at least as long as these two waves? Could take us up to, the 150% extension, something like that, which would be 326. So in this case. So again, very important. Fib levels, price respects fib levels a lot. We're going to drop down to a smaller time frame chart. I also want to show you guys a couple different other fib tools and the way I use them. So these are your basic fib tools as far as fib retracement and fib extension. So something I do want to show you as well, and many people who follow me have seen me post about this before, but I'm going to show you on a shorter time frame how to use my fib settings for optimal trade entry. So here is a 1-minute chart, and something I want to look at is today's price action, and I want to show you how you could use this my custom settings for the fib tool in order to determine where price might go. And the way you do that is, I'm going to show you the settings in a minute, but we need to first get the fib mark off. Okay, so we're going to open the settings. I'm going to share these with you. Okay, this is the standard template. This is called the optimal trade entry fib tool that I use. Okay, let's see if it worked. All right, perfect. So let's go ahead and I'm going to teach you about optimal trade entry. Now this is a little bit more advanced for traders, and it's not always perfect, but it does give you a point where you can enter, and it gives you a projection all in one. Okay, and this is for day trading and this is for swing trading. But you can see, or short swing, like not multiple days necessarily. You can use it on all time frames, but it's specifically useful in 1 minute and 5 minute charts. Okay, and what we're really looking for with this fib tool specifically is we're looking for reversal points where we can see that a bottom potentially was traded and rejected, price rejected, right? Forming a bottom. We're looking for, in this case, where we're looking for a move up and a reversal, we're looking at swing low to swing high, okay, back to low. Now what we're looking at specifically is we're looking at the 70.5% retracement. So I'm going to throw that up in percentages so you can see it better. Oops. Here we go. Okay, I'm going to turn it to percentages instead of values. Showed you guys how to do that earlier. Again, I have mine black and gold. I'm looking at the 50, but what I'm really paying attention to is this line right here. I'm going to move that to center so you guys can see it more clearly. Middle. Okay, there, the percentages are right on the line. So what I'm really looking for is for price to show a willingness to trade back down to the 70.5%. In this case, it overshot it and it traded much lower, which is fine because it never actually took the 100%. But how you can use this tool is that you can use it to enter and look for extension levels. And this is just a little bit different because you don't have to use 3 points of contact. So you don't have to wait for a trade to fully develop in order to look at the extension. But you can grab 2 points of contact. So again, swing low, swing high. You're entering the trade at 70.5% retracement. Your stop loss is at zero, or at the 100% retracement all the way back down to the low. Okay, and depending on whether you enter in one contract for options, or if you entered in shares, or if you entered in multiple lots of contracts, then you can trade this differently. You enter in at the 70.5, okay, or as close to as possible. Then you aim to target your first exit at the 0% fib level. Okay, and I'm going to label these for you so you can see exactly how this works. I'm going to call this price target 1 at the 0%, right? And you can see it hits right there. So that's really just from the 70% retracement back up to the top to test. Second price target is right here at the next extension up, which is a 27% extension. Price target 3 is going to be at the 62% extension. And final, which is called symmetrical swing, is at the 100% extension of that move. Okay, and you can see where price went. Right? We came back, we hit optimal trade entry, we never closed out. I'll label that as well. Okay. Stop loss below or right at 100%. If you get stopped, you get stopped, and that's just the nature of the game. This trade did not get stopped. Okay, swing low, swing high, optimal trade entry. Let me label that for you as well so you guys know what it's called. Optimal trade entry in the 70.5% retracement. Price target 1 hit, price target 2 hit, price target 3 hit, all in 3 1-minute candles. Symmetrical swing, didn't quite hit, but nearly. Price came back down and tested fib level Okay, and then price ran through symmetrical swing. So in this case, this was a small move. It was from 243.09, okay, to symmetrical swing was 244.15. So it was a $1 move. But if you were to have entered into 245 contracts, then you would have cut a nice move and you would have been able to take that symmetrical swing and close out. It would have been a good gain. You would have looked for a re-entry. And in this case, we're not necessarily looking at a fib level for that because the reversal was here and that's how you play the trade. Okay, so I would not be taking this swing low to this swing high and then again looking for optimal trade entry. Sometimes that works and sometimes it doesn't. So I'll just move it to show you that maybe in this case it did because price had a willingness to continue to move higher. Okay, but if we took swing low to swing high, that's here. Okay, and if you were looking for that full extension, although we got to optimal trade entry, traded low, didn't take the stop. Right, so let's move our little logos here so you can see how that works. Okay, optimal trade entry. Okay, price target 1, right at the 0. Price target 2. Okay, price target 3. And then finally, symmetrical swing. But if you took this as your trade and you were looking for symmetrical swing, you never got there. You didn't even get all the way to price target 2. So how do you know to exit? Well, if you caught optimal entry here and you saw a nice expansion and you were scaling out, you would take price target 1, you would close more at price target 2. And the way I often teach this is say you enter like, say, 5 contracts or 10 contracts. Like, let's say 10 because it's a nice, easy number. Okay, I entered in 10 contracts here. Price delivered back to swing high. I exit 5 contracts. Okay, I watch. See if price continues to deliver. Price delivers 2, price target 2. I have 5 contracts left. I close 3. Okay, I watch to see what price wants to do. Price runs up and it rejects before it gets to price target 3. Okay, I potentially close 2 more contracts at price target 2 or at price target 1 because you're still in profit on that. All the while, you're moving your stop up as price runs in your direction. You're moving your stop up to break even, right, in optimal trade entry. Then you're moving your stop up to PT1. So anything, right, if this move comes back down here, boom, hits the stop, still in profit, right? We did end up going higher, so you could have held on, but the way I teach is risk management and mitigating risk, and that means moving your stop losses up if price runs in your favor, right? Especially if you're trading options, because you never know when price is going to just pull one of these, and you think you're heading to a symmetrical swing, bam, back down you go through optimal trade entry. You never got stopped technically at your stop loss, but you would have been negative on this position. You know, theta starts to decay your options. They start to lose the potential to have value as they may not run to the strike price because you're losing time. So, you know, price traded back up, but never got to symmetrical swing. And that's the point, is that it is especially a good tool when you're looking for reversals, right? Here, reversal candle, trades back down into order block, okay, runs through. Good setup here for optimal trade entry, right? Even though there was a little bit better fill than the optimal trade entry, it still would have been a great play, and it ran to its full symmetrical swing. Okay, so again, I'm going to open this up. I'm going to let you guys look at those custom settings for my optimal trade entry fib tool. This is a smart money concept, and I learned it from ICT. Many of my concepts I have learned from ICT. And so we got the 0. Okay, we have the 50%, the 61.8, and the 70.5. The 70.5 is optimal trade entry. Then we got the 1. Okay, and that's going to be full 100% retracement. Then you have the negative numbers. Okay, the first price target. Well, first price target is back to 0. Second price target is negative 0.27. Then negative 0.62. And then negative 1 is for the full extension. And again, these are my custom settings. I don't use a trend line on this one. And there's the rest of my settings. If you have any questions about these fib tools, how to use them, you maybe, want to know, does it work in a specific scenario, any kind of questions like that, feel free to leave a comment, reach out to me. You can find my socials in the description below. You can also find information of how to find me during trading hours, often hanging out in a Discord, traders helping traders. But I've had a lot of responses where people, especially beginning level traders, are interested in learning just how to use some of the tools. Because when I'm posting my live trades and I'm posting, my live analysis and saying, this fib level, or I post OTE, optimal trade entry, right? And I have the fib tool on there. And many traders that are new in the game, they say, "What's OTE? What's fib level? What does that mean? Where are we going?" Right? Well, I'm teaching you now how to use the optimal trade entry tool, how to target symmetrical swing, looking for reversals. So now you guys know when I reference those things, how to do it. You can follow along on the charts with me as well. So I hope this has been useful. There's ways to support the channel down below. My socials are there. Like and subscribe. Please share with your friends. Please share with entry-level traders that you think would benefit from learning how to use some of the tools that are inside TradingView. Look forward to the next episode where we're going to look at patterns. Okay, and I'll give you just a little sneak peek. We got different patterns here, especially head and shoulder, right? 3 drives to a high. And we'll start talking about a little bit about Elliott wave and wave counts. So again, I hope to see you guys on the next one. I really look forward to it, and thanks for all the support.